many sights to see. And when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up.
Hello, traders. Gary Wagner here. It is approximately 9:45 a.m. in Honolulu, Hawaii. It is Monday, the 18th day of July, and this is the daily report for gold. What a day we are having in the market today. A new historical benchmark was reached as gold traded to 1,600 and beyond. Currently trading, as you can see on the board, 1604.72. Let's get right to the board. Take a look at our 3-minute chart here, and I want to put in a couple of marks so that you have a sense or a feel for the activity. This, of course, is our dividing line for today between Monday and Sunday, and then this, of course, is Friday's activity right in here. So Friday, Sunday, today. Next thing I want to add is our historical benchmark, 1,600. Let me try to line that up. And as you can see in last night's trading, yesterday's trading, we did get this market as it climbed from about the 1590 area, would come up and actually test for the first time in history $1,600 per ounce. But it really wasn't until today that we actually saw 1,600 become a reality as it prints above it, trades a little bit below it, 1,604. Traders, the next chart that I want to take a look at, this is a 2-hour, 120-minute candlestick chart in Henkin format. And as you can clearly see, it is my opinion at this point that we are firmly established in our current wave 5. In terms of our retracement, this was our old record top, 1577. We get an A very long B, and then our conclusion, or C. We talked about the fact that we needed to have the market break above a certain point. That point was around 1540, right in there, 1540 up to 1553, 1557. It was these series of tops right in here. And as you can see, once that market broke above it, it really took off running. But it has had some very strong power, incredible power, all the way through this trend as we've been witnessing it since 1475. And, of course, when you look at the monthly chart, this is a monthly chart in standard candlestick format, of course, on a record high. But you can see how it has really gone way past that handle the middle line, the engulfing bullish on a monthly, and, of course, a new record top as it goes near the top of the channel. Now, in terms of where I think that this market has potential to go to, I would think that at this point it's probably going to take a stab at that top of the channel. That's going to put it around 1660 plus on the market itself. Now, traders, you do realize that I did send out a special announcement last night, and that was simply to raise our stops. Traders, you should now have your stop at 1570. Now, I wanted to spend just a couple of moments and explain what the strategy was and why I placed the stop where I did. Obviously, it's going to protect some profits. I don't believe that the market's going to come down. But as the market's been trading, I believe that as long as we put it below these two lows right in here, again, this is a daily chart, so these are the lows from last week. I believe that even within the swings of the market itself, in other words, even if we get a $20 spike down and up, it's not going to affect our particular position. So, traders, you should have raised your stop to 1570. Secondly, if in fact we see the market form a base above 1608, if it just goes to 1608, I believe we might see some sort of a retracement. If it can form a base and move on above it, it would be a time to scale. If we see it hit and begin to stall 1608 to 1614, which is my first target area, we might want to pull profits at that area, look for a pullback, and re-enter for the secondary leg within this wave 5. Traders, this morning I published my latest commentary for Kitco.com, and this is one of the charts that I used. And what we have talked about, and we have been using this chart for quite some time, is the fact that when we take a look at this trend line, this is that support line right in here. And of course, as you can tell in terms of the targets and the data points, that it is based upon these two here. You also have this data point right in here. And there was no doubt that the market, in fact, broke through that. Interestingly enough, it found support exactly at the 38% retracement level. It's a 38% retracement from the beginning of this move up until the record top. It comes down and perfectly tests the 38% retracement, and now is moving back up. And of course, the key thing here, the critical factor, is the fact that it's trading well beyond, it's back above that major support line on the weekly charts. Traders, this is a 240-minute Henkin chart, Japanese average. Once again, each candle, Henkin candle, represents 4 hours of trading. And what we can see is this market has virtually been straight up from 1475. We've had a couple of small dips or consolidation points, but other than that, as you can see, we have had a standard protocol of straight candles in each time following that particular dip. But here's the thing, these dips have been very, very small and very shallow, to say the least. So traders, what am I looking for in terms of the big picture? Where do we think this market is going, both short-term and interim? And for that, I'm pulling up this particular chart. This has our Fibonacci extensions. It is a daily chart labeled at 440 minutes. I am basing these extensions off of 2 particular data points. The first data point that I'm using, these are all starting at the end of the January correction, as you can see, and the price target is 1308. This is what we labeled as wave 1. So our first extension number 1, is off of that. Extension number 2 is the entire rise that we had before the consolidation, before this long protracted D wave. When you do that, you come up with some target areas, and one of the main target areas that you can see, let me go ahead and move this out just a little bit so it's a little bit clearer. As you can see, the market comes and it trades to a peak and is currently just up against, this is a 50% move of this entire move here, and at 1608, 1614 is a 100% move of this. And you can see how they, in terms of their harmonics, they line up very, very nicely. So this is one potential, just one potential outcome. And as I say, there's other possibilities, but traders, I do want you to consider this as a potential possibility. And here's what I'm looking at. It would be possible for the market to simply begin to trade and then find resistance up around anywhere between, as I said, 1614 and 1608. That would be a good opportunity for our first dip. If we, in fact, do get that dip, I am going to look for the dip to be anywhere between a 23 and 38% retracement. I'm charting the 38% retracement, and then move into our next leg. I believe that this market has the potential. My price target right now is around 1680, towards the upper end of the target. Let's see how it reacts in this area. Traders, this is a historical day. We have closed above $1,600 an ounce. The fundamental factors in the market are such that I believe that interim term, medium term, this market is going to propel and carry itself to yet new contract highs. However, I do expect at some point to see a dip in the market. If we see a dip here, as I say, we'll pull profits, look to buy back here. If the market forms a base above, call it 1608 to 1614, this particular band right here, then it might take us as high as 1647, 1641, before it would come down. So we would see something a little bit different. It would look more like the market coming up here, and then from there, we would get our retracement. Our retracement could either be to 1600, and if in fact the market only goes to the 1647 and then moves down, I would look for that type of a move at that point. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange